you today? How are you?
I'm doing good. I'm doing good. How are you?
Okay, I'm doing super good. There's a couple of topics that we can cover today and use a lot of our time, but it doesn't take a lot of your time because it's so simple. First one is throughout this COVID-19, we've had some folks that were taking advantage of business programs, government programs, and something where they didn't have to pay their mortgage payments. And maybe I should let you describe to me when people want to refinance and they've taken care of some of these other programs, what is getting in the way of people refinancing who businesses have suffered?
Well, that's good. And when businesses suffer, they passed that CARES Act, and that meant that if you could not make your mortgage payment, you could defer the payment or go into forbearance, which was a reduction or a suspension. So more than 4 million Americans that have a home, they did that. So they went into forbearance. And what they didn't realize is that there's a lot of lenders that are calling in other words, when you come out of the forbearance, you miss 2 or 3 payments. Now that lender wants all the payments at once, also known as a balloon payment. So that's going to create some hardship for people. And then there's people that we know that want to refinance to take advantage of these low historic rates. And if you're in a forbearance, they won't let you do a refinance, which is what you're alluding to. But the good news is they just passed a rule where as long as you bring the mortgage current, so if you're in forbearance and you didn't make a payment, as long as you are current on that mortgage, we can then do a refinance. And there's a lot of people that need that right now.
A lot of people need that special help, and we are personally acquainted with many people needing that special help. Exactly what advice did you give them?
Yeah, so there is one person in particular that has equity in their home, so the values of the homes keep going up, the rates keep coming down, so they're able to get $20,000 to $40,000 out to pay off some high interest bills or put some money away for a rainy day. And we're also able to lower the rate about 1-2 percentage points from where they were. That's huge for a lot of people. So that couple that I'm talking about, they're going to save about $180 per month on their payment, plus pull money out of their home. So that's a great tool for a lot of people right now.
So the nice thing about what you just mentioned, a particular client of mine who reached out to me after seeing these videos, and I call them often, they said, who is it that can help us? Now, they had called other mortgage agents and gotten different information. You were the first one to really help them, Dave. Tell me how that conversation went when you first got on the phone with them.
Well, that's great. Well, they had a lot of questions, and I think no matter what, you always want to make sure you understand the process and what their goals are. So I approach every client the same. I listen to what they really need, and then I try to make suggestions that'll help them in the long run. She needed a little money out, and she had some questions on the monthly payment. So we were able to come up with a plan for her and her husband that works, and I wanted to make sure the monthly payment was going to be okay. And she had questions on closing costs. And the nice thing with closing costs, unlike when you buy a home, you have to come up with that money out of pocket, Sandra. When you do a refinance, the closing costs are rolled into the mortgage. So really a lot of people don't have to come out of pocket with any money. Those closing costs get rolled into the mortgage, and that helps too.
That's exciting. And I've been here long enough that I've helped many people move into neighborhoods where the top criterias match things that allow them to have equity in their home. In other words, a neighborhood that was close to amenities, to jobs, to schools, even though they didn't have kids in that particular school, or even grown kids living in the area. All these things account for value. So when we see these valuable neighborhoods, it's not just about price, it's about in 3, 5, 10 years, is this home going to continue to add value and give that person a chance to have equity? So when you're advising somebody who's just starting out and they want to buy a home and they've met you before they've met a top-notch agent like myself, what are the top things that you advise them to do?
Well, our goal is to ensure that every buyer understands the mortgage process from soups to nuts, right? So we want to make sure they understand from the beginning to the end and then everything in between. But the first thing they need to do is a mortgage application. And that's where I'll look at their income, their assets, and their credit to determine what they qualify for. A lot of people run right out to you and they want to go look at a house, but they have no idea what they even qualify for. So it makes sense first to get pre-approved so that they know what they qualify for. And then we look at the credit. By pulling the credit, I could help them, Sandra, get the credit score up so that they do qualify. And what that means, I'm not a credit counselor, but I know enough. I just had a customer that had a 640 credit score. They didn't qualify for the mortgage program that they wanted, but with a couple little tweaks, we were able to get that score up within 7 days. We didn't have to wait for a whole cycle. And in this market, you can attest to, the market's hot.
Yes.
So the buyers need to be prepared up front so that when you show them the dream home, they're ready to go.
That's exciting. Now, I've noticed on public service announcement that there's a lot of 20, 30, and 40-year-olds that don't have the financial wisdom on how do I buy this home. So the number one thing I like to talk about, because when I was in my 20s, I actually had a Series 7 license, and I looked at where my money was and where I invested in, and owning your own home, from my perspective in the 20s, and now I'm a little bit older, it was a piece of equity that always beat inflation. That means you have to be in the right neighborhood. So for the 20 and 30 or even 40-year-old who's just now hearing this, what are the couple of, they have to be, as an example, in a job for 2 years. What are the other things that they need to have their ducks in a row to get a mortgage?
There's a lot of people that just came out of college, Sandra, or maybe a trade school. So if they were in school, that actually counts as job experience. So there's many people that could be listening to this and said, man, I don't have 2 years, but maybe they just graduated and now they have that job. That counts. So that's a nice thing for them. And think of the people that you've helped over the years. And I remember in my 20s, think of what the prices were then. It was a long time ago for me. But like you said, you beat inflation. So I was just talking to somebody that bought a home 5 years ago, and they were afraid. They were scared to make that leap of faith, but they listened. They did it, and they bought that home, like you said, with nice amenities in a good school zone, close to the shopping, and it checked all their boxes. Well, now they're selling that home, and they're going to make $50,000. $50,000 that they're taking equity that you talked about from their home, and they can use that on their second home. And if they wouldn't have started that, they wouldn't have listened, they wouldn't have been able to buy a home, right? They'd just be paying rent, and you don't get anything for that, right? It's just like taking the money and throwing it out the window. You don't get anything for it.
Right, you're throwing it out the window, and whoever owns that property, you're actually paying their mortgage for them, aren't you?
You are. So you are paying their mortgage for them. And a lot of people don't realize you can get into a home today with just 3% down. A lot of buyers think they need 20% down, but with 3% down or 3.5% down, they can get that, and then they can use their 401k. A lot of people have those. They don't realize they can use that, but they can tap into their 401ks as well. So that's a really good idea as well.
You know what I like about this subject of first-time home buyers is if they're just a couple $1,000s shy of making that down payment, they can be gifted the money, can't they?
They can be gifted. And I just found out they could also be gifted by their employer. That's something new. So if they have a good relationship with their boss, sometimes their job could even give them a little bit of help on the down payment. That's something new.
Oh my goodness.
Yeah,
That's exciting. There's a fair number of companies around here that have great employee retention because it's a super place to work. There's good benefits. There's some that have pensions. There's some that contribute to your savings. So now there's some out there that can be encouraged for employee retention in a younger group or anyone to give a down payment. So the benefit for the employer is employee retention. So if the person who's listening to this doesn't work for someone like this, they can be gifted, right? From
they can.
Mom, dad, grandma, grandpa, cousin.
Yeah, as long as it's a family member, Sandra, they can be gifted. Any family member, in-law, sister-in-law, brother-in-law, and if they're not married as well, but they're domestic partners, that counts as well.
Super. It requires a letter, correct?
It requires a letter, and we have to know where the money comes from. So it can't be cash or mattress money. So we have to vet it, meaning we have to see where the money comes from. So for example, if your mom is going to gift you $10,000, we have to show the money coming from mom's account into your account. But we got them with all that. So we'll help with that.
That's exciting. What grandparent or parent wouldn't want to help put their child or grandchild into like a forced savings program that's also going to keep a roof over their head? The other benefit I understand is that that family member can give up to $15,000 a year and write it off as a charitable gift, right?
They can. And man, you are so different than every real estate agent out there. Your financial background. I love the forced savings account because that's what these homes are. You're taking that money and you're putting it into your home, but you're going to get it back. Like you said, when you go to resell that home for them, it's amazing that you do those things. And you can do that. You can gift up to $15,000 and get that write-off. That's really nice.
It is super nice. And it also comes back to working with a team that know the urban economics of an area. When the exit strategy is to take advantage of all these extra financial tools, is that home going to have value in 3, 5, 10 years? And from your perspective, what are some other attributes that will help that person once they make the mortgage and they want to close within 30 days? What are the other things you advise them to manage?
Well, obviously, we go over the process, and a big part of it is when you find them the dream home is setting up the home inspection and making sure the house is okay. That seems to be a lot of fear and a lot of first-time buyers. Then you get into home warranties, making sure they're protected. So if something goes wrong, there's a policy in place that can protect them for that. So I think overall, just finding out what their comfort level is and what their fears are, and then overcoming that. But as far as being ready for the mortgage, if you have a pay stub W-2 job, it's quite simple, Sandra. It's last 30 days pay stubs, and then it's your last 2 years W-2s, and then the last 2 bank statements. So it's always 2, 2, 2, 2 of everything. So if you think of that and you're prepared up front, the mortgage process is very smooth. I know in my case, a lot of these loans were approved already within 7 to 15 days. So that's really quick. So that takes away any anxiety. And, the nice thing too, working with a great team, if we say we're going to do something, we do it. So that means they can shop with confidence.
That's exciting. So 2, 2, 2. And let's say they're so excited about moving into this home, and in 30 days they're going to move in. And by the way, this is originally being put together in June, so we're crossing over into July, and there's a furniture sale for the 4th of July, 0 down an entire home, but we're not closing till July 15th. We know people are going to be tempted to go out there and buy that furniture 0 down, no payments for however many years. But why would we advise against them from going and using a lot of their consumer credit or any savings during this time?
That's great that you bring that up. And we do a do's and don'ts, and that's for another podcast, the do's and don'ts when you're already in the process. But you do not want to go out and obtain any new credit, buy any furniture. I've seen that not derail a sale, because what that does, it adds debt to the debt to income ratio. So even if you're not making any payments, it does add a payment. So you don't want to buy any cars, any furniture, any jet skis, any boats. So you want to leave all that alone. Just wait until you get the home and then buy all the furniture that you can.
Exactly. And exciting, because getting into that new home is a great idea for keeping a roof over your head. You don't throw money away on rent, and it gives you a peace of mind that now you're building equity, you're in a neighborhood that you want to live, and you've made a decision that's sound and someplace that will build towards maybe you're going to be in that home for life, or maybe it's just your home for the next 5 or 7 years. You've made a good decision that so in 5 to 7 years, you have money and the ability to move to where you need to go next. Any other points we want to bring up today?
I think you just hit it. You being proud to go home and just know that's yours, right? And
Yeah.
Also with these rent increases, we live here. Think of where the rent was 5 years ago and where it is today. It just keeps going up and up and up. So if you're like many Americans and you're on a fixed budget, having a home that you're going to sell them and we get them a nice mortgage, they can know that their cost is fixed. At least that cost is fixed for the next 5 years. They can budget properly, and then put money away in their savings to even, have a better life. So, versus rent, where there's, next year the rent can go up $300-400 a month and they don't have a say about it.
Now, on your do's and don'ts, just a punctuation mark. They have a fixed budget. They're going to have it for the next 5 years, and they're in a job that they love. There's a potential in the next 2 to 3 or 4 years they get a raise. Do you talk to them about what they do with that extra money?
I'm starting to do more of that with our upfront analysis, more so on the refinance side that we started the conversation on, because a lot of these refinances, for example, if we save them $200-300 per month, what I'm advising them to do is continue to build that equity 300% faster, take that savings and put it on the new mortgage. So now you're making an extra payment. And then when you go to sell the home in 5 or 7 years, you have that much more equity in the home. So these are all good ideas that we're doing.
That's exciting. Another way to use the home as a forced savings tool, isn't it?
It is. It is.
Well, super. I appreciate your time today. It's very hot here in Florida, and the market is hot as well. Thank you, Dave.
See you, Sandra. Take care.